So we're at a very interesting moment, not only in regards to Tesla stock, but the overall markets. As just the other day, I told the Push and Profit private group that historically speaking, October is where we see a lot of bottoming out for the markets, as the markets tend to have some aspect of seasonality to it, right? However, we also have to understand that historical price action is not indicative of future performance. We have to say that, but one of the things I told the Push and Profit private group is that we may start to see a bit of a rally as things start to kind of pick up for the fourth quarter. But I'm also someone who has been very vocal, not only to the Push and Profit private group, but also here on YouTube, that when you look at things from an economic perspective, it's not like everything's all good. And this is why I say the rally would be a relief rally and it would be temporary, because I've talked about on this channel a multitude of different times, all the economic data is pointing to bad news. I mean, you could go ahead and feel free to check out any of these previous videos I uploaded. I don't delete any videos on YouTube. You could go ahead and check it out, and you'll see that in previous videos I talked about the 10-year treasury and how also we had the leading economic index fall down consecutively for 17 months in a row, and how the federal funds rate at these high levels are still restrictive, and how we're seeing bankruptcies and just a whole bunch of bad news that doesn't really show signs of a great economy, which means that obviously stocks, even if they push upwards, I don't think that we're going to start heading into all-time highs. However, I want us to actually take a look at this clip from CNBC where we hear an analyst from Morgan Stanley say some of the same things that I've been saying for a while now. Now, I want you guys to watch this because here's the thing. Most of the market pundits that you see on TV, a lot of times they actually disagree with them. But this particular analyst pretty much, I believe, in my opinion, hit it really pretty much on the nail with everything he said. And I want you guys to check this out for yourselves.
Joining us now is Morgan Stanley Senior VP of Investments, Jim LeCamp. What are you telling your clients at Morgan Stanley about this price action?
I think we're going to have to be really patient here. I mean, the market is set, the stage is set for a short-term rally. We're bouncing right off support on the S&P 500, right around 4,200. We've done that all week. Seasonally, we're entering the strongest time period of the month, of the year, really mid-October through late January, and especially in years where the market's already up. In the last 56 times that the market's been up 10% on the year or more, as we enter this time frame, we went up 48 of those times. And with the market oversold, a lot of hedge funds have sold off. There's a lot of liquidity in the market. We're setting the stage for a bounce. And then if you look at the charts on some of these big cap tech leaders, they've been basing. They haven't been going down, even though the market's down 5 of the last 6 weeks. So, yeah, I think we have a fourth quarter rally, but we've got a lot of problems out there, and they're not being solved. First of all, the jobs numbers today, don't believe them at all. BLS has been wrong all year. They've revised every single number down. What good are their metrics?
What do you mean they revised the last 2 months higher by 119,000?
They did that today after 13 months in a row of revisions. And leading economic indicators are down 17 months in a row. Consumers really stretched here, too, especially with gas prices so high.
So you're short-term positive, but worried about next year?
Yeah, I am. And I think especially look at what's happening to the 10-year Treasury today. The yields keep going up, which means the curve keeps getting even more inverted. And banks have a ton of holdings of Treasuries. And guess what? We have to sell a bunch of Treasuries next year, trillions of dollars worth. Who's going to buy them? The banks already have too much, and China is selling theirs. So who knew when you increase the money supply by 40% over 2 years that you might have problems down the road, and then I think that's what's happening.
Some still wonder what would happen if the Fed were to change their rhetoric around QT, right? I mean, we'd be right back in it.
They're in a really bad spot, and Paul Volcker did this. A lot of people forget during the presidential election of Carter and Reagan, Paul Volcker paused. And what happened was inflation ramped up even more. So I think the Fed's in a really difficult spot here, and especially with energy prices. Now, energy prices high keeps those inflation numbers higher, but it actually ramps down consumer spending because it pulls money out of their pocket. So I think we're going to continue to see those inflation numbers work down a little bit, but be stickier than most people are hoping for.
So if you're going to play a Q4 chase, it's around mega cap tech or something less obvious?
And I think you can keep kind of a barbell approach. I think you can keep a lot of money in cash because you're getting paid on cash right now, 5% or more. So, and I like the energy space. If you notice, West Texas crude was down earlier, but a lot of those E&P stocks were up on the heels of the Pioneer announcement with Exxon. Those companies, their earnings are going to be great in here, even with prices down here over the last few days. I think you can have energy on the one side, which is also a value play, and large cap tech. And I want to point out one other thing on large cap tech. The PEG ratios, the PE to growth ratios versus their competitors, these stocks are cheaper than they've been in 7 years by that metric. Now, it doesn't mean they're cheap. It just means they're cheap relative to their peers.
What is sentiment like among your big client base at Morgan Stanley right now?
Everybody is worried about everything. You have a lot of skeptics out there, and you have very few people that are saying, hey, things are great. Nobody thinks things are great. Bankruptcies are up, delinquencies are up, so they're all worried. Now, that said, we can get paid more on fixed income now. Private equity, private credit, some of these areas are still doing fairly well. The stock market is trying to hold on support. It's not the end of the world for investors, but economically, there's a lot of worry points.
And so a lot of great points was mentioned by this analyst from Morgan Stanley, and this is rare for me to actually agree with one of the talking heads on TV. Honestly, very rare. But with that said, I want us to go ahead and hop into my laptop. This way we could take a deeper dive or a deeper look into Tesla stock, look at it from a technical perspective as well, and also cover some other events that we should absolutely be mindful of. But before we go ahead and hop into my laptop, make sure to check out the comment section of this video, because there's going to be a pinned comment where I'm going to have a link to my free weekly market pulse insights, where every single week I send out an email talking about what are some things that we should be aware of going into the market as market participants. So regardless if you're a trader for the short term or investing in the long term, these are events that you're obviously going to want to be aware of. And so make sure to check out that link in the pinned comment section of this video so you guys could join and get access to my weekly market pulse insights. And with that said, let's hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and we saw that Tesla stock had a pretty decent push upwards today. Despite the cuts in prices for some of their vehicles, we saw Tesla stock push up, as well as an aggressive push for the overall S&P 500 index ETF SPY. But what we saw today was for the S&P 500 and as well as Tesla, we saw a lot of selling pressure when today's job reports came out. We saw a big red candle for Tesla and the overall markets, and it was really because of this fear that with more jobs added than expected, well, this provides an uphill battle against inflation for the Feds, and this may provoke them to hike in their next meeting on November 1st. However, what we ended up seeing is that the market actually reacted positively, as when you parse through the job data, yeah, more jobs were added, but also wage growth kind of softened. And that was actually good because we could still have possibly the same amount of jobs added, but with wage growth stifling, well, that could provide this kind of best of both worlds scenario where there's this equilibrium of maximum employment, but also price stability. And so that's what the reason, or that's really the reason we saw the markets push upwards today. Now, if we kind of zoom out today, we see that Tesla stock still got rejected on this red rectangle that I have here labeled as a supply zone. Now, if you've been watching the channel for quite some time, or I guess the most recent videos that I have been put out there, by the way, if you're new to the channel, consider subscribing. But this red rectangle here, I labeled it as an area of supply, or a supply zone, because when we look at it from a 4-hour chart with Tesla, we see that Tesla was getting rejected around this area, and it wasn't until we had the catalyst event that propelled Tesla upwards, and it was kind of holding up steadily above this area until it broke below it. And so that old support kind of turns into a resistance, and that's why I labeled it as a supply zone. And so this is the third day Tesla testing it. Now, I'm not saying that Tesla is never going to break it. That's absolutely incorrect. Tesla is eventually going to break this area of supply. It's just recently we've been seeing that every time Tesla goes up to this level, the sellers step in. But again, one thing that we have to understand is that with technical analysis, it's not to predict the markets, it's really to measure the markets. And so we could possibly finally see Tesla break above this area of supply, and that would end up becoming an area of demand if that does happen. Now, let's go ahead and look at Tesla from a daily time frame, and let's actually get rid of this. I like to declutter the the chart as best as I can. So right now we're at a unique area, right? Because we're again pointing at this area on the right with the volume profile where we see volume relative to price, and there's a lot of volume relative to price right over here. And when there's a lot of volume relative to price, that means that there's a lot of exchanging between buyers and sellers. That's why you see areas of supports, resistances, and consolidation take place over here versus when there's little volume relative to price. If there's buying pressure or selling pressure, that's where you see the big moves because it pushes up the order books. And so we're actually kind of covering above or moving above this area where there's a lot of volume relative to price, which means that if we just have another green trading session, we could push up into, again, an area of lower volume relative to price, and that could be a huge move for Tesla. And we could see Tesla actually move upwards, but one of the things is I don't think Tesla is going to do is break into an upwards trend. Now, I hope I am wrong. I hope I'm wrong on this, but one of the things I've highlighted is that this area right here has been a strong descending trend line, and it's most likely that we may see Tesla again get rejected as, yeah, we may see some relief in the fourth quarter, but it doesn't necessarily mean all the problems are gone. Now, the reason why I think, again, there may be a relief rally with not only Tesla, but a lot of these big tech behemoths is simply because when you actually look at these tech giants, right, the Magnificent Seven, with most of them having a market capitalization of above 1 trillion, they're well equipped to navigate current market turmoil, right? Because they have a huge size and substantial cash reserves that really contributes to their resilience. And of course, Tesla is part of that Magnificent Seven. And so few companies globally can match the robust balance sheets of these mega cap technology firms. And that's why we're seeing, if we actually look at, let's look at RSP, which is the S&P 500 equally weighted, right? So this is when it's equally weighted and not having a huge weighting on the Magnificent Seven. We see that it's been falling much more harder in comparison to SPY, right? Yes, SPY has fallen down, but you see this big uptrend that we've had in the beginning of the year, which was mostly carried because of the Magnificent Seven. And again, we're going to see, this divergence in the trend when you compare both the equally weighted and the weighted S&P 500. And so that's why, we're seeing like these tech stocks are holding their weight. And that's why we may see more capital go into these companies as we see more turmoil causing more of capital kind of leaving from a lot of these other names that aren't these big tech stocks. Now, something that we want to obviously pay attention to is coming into the next couple of weeks. I believe, let's see, we're on the 6th. So on the 18th, we have Tesla having their third quarter earnings. Now, we've heard Elon Musk in previous earnings report the last one mentioned that it's most likely that deliveries are not going to be that well, and that's exactly what we saw because there was a stifle in the production due to upgrades of their factories. Now, yeah, that's going to mean that third quarter numbers may not be that good, but it's going to be interesting to hear, not just see the numbers, right? I think it's obviously we want to pay attention to the numbers, but it's going to be interesting to hear if we have commentary from Elon Musk on the fourth quarter, because now that a lot of their factories have been updated, right, with the Gigapress, well, does that mean that we're going to have much more vehicles produced, and then that allows them to scale and produce vehicles more effectively? And even though we had some price cuts, yeah, that's bad in the short term, but it's hurting the legacy automakers like Ford in the future. So, there's a lot that we're going to want to pay attention to for the Tesla earnings, especially what either Elon Musk or the new CFO says. And it's going to be interesting. Of course, one of the things I've kind of said in previous videos is that, yeah, for this quarter, we're most likely going to see sales for deliveries not do that well. It's obvious, but we're going to want to see if revenue from other services actually ticks up, as we've been seeing a lot of companies, right? It hasn't really started, so we may not see it in this earnings report, but going into 2024, as early as the second half of 2024, we're going to see a lot of the pretty much all the legacy automakers and other automakers that have joined the Tesla supercharging network. Some of them are already starting to join beginning into 2024. And so I believe that we're going to start seeing this ramp up in revenue for Tesla. Now, that's a long-term view, right? I know some individuals, they want to know what's going on long-term. Some individuals want to know what's going on short-term. I think long-term, I'm still bullish on Tesla. I've been investing in Tesla since 2017, and I don't plan on selling Tesla for a while. I'm still very bullish for lots of reasons, but I think in the short term, we may have a bit of a rally, but I expect that we're going to get rejected by this descending trend line. Fingers crossed that I'm proven wrong and Tesla actually breaks above here, because that would be great. I'll actually add into my long-term portfolio. But again, I think that this relief rally would be temporary. And let's see, if we map it out, Tesla from where it's at now to possibly getting rejected, we could see possibly another 10%. Now, granted, I don't think this 10% is just going to be this linear motion upwards. Of course, we know how the stock market moves. It kind of moves sideways. But over the course of the next couple of weeks, or few weeks rather, I expect Tesla to actually start testing this higher level over here. So again, I'll keep you guys updated. Let me know in the comment section what are your thoughts on Tesla as we are pretty much started. We're still in the beginning of the fourth quarter. We'll see what ends up happening, and let me know in the comment section below. But before you guys go, make sure to watch this next video right over here, or if you have so already, consider watching this video right over here. With that said, I'll see you guys on those next videos. Take care.